Vikas Khemani joining us, founder Carnelian Asset Management and Advisors. Vikas, what a great day to have you on, especially because I know that that smile is going to come. We're getting you on a good morning where, you know, that resilience and faith, what we're seeing is a testament of the Indian investor right now in the markets, isn't it?
I think, of course, Indian investor, and also more importantly, even Indian economy. We all know that, of course, there's a lot of chaos happening around the globe, led by the tariff war. Lots of, uncertainty. We all know that, and at the same time, it's also matter of fact that India is relatively insulated from what's going abroad, all over the world. And I think it's, in my opinion, testament to that fact. But yeah, I mean, you can't remain unscathed when there's a fire all over the place. I mean, you are bound to get some amount of heat, but when the dust settles down, when the fire settles down, obviously, one knows that, which countries or which economies will stand tall. And India is surely one of them.
So, okay, hi Vikas, good morning to you. And I think we were talking about this as a bit of a theme, right? Because in this chaos that is playing out globally, ultimately, everybody seems to be focusing inwards. And various economies are already starting to have measures announced to bolster the domestic economy. We're speaking on the cusp of the RBI monetary policy outcome where in all probability we're going to see another rate cut or measures at least to bolster growth. How much of a factor is that going to play, in your opinion, in further adding to what the government has already announced on the fiscal side?
We must understand right now what's going on at a global stage is very unprecedented. One does not know what will happen when you wake up in the morning, what kind of announcements will come, what kind of, and whenever these kind of announcements come with a far-reaching implications for the global economy, it is natural that investors will get worried and tentative, and especially the short-term investors tend to act and react. And that's what creates volatility. And in that volatility, any short-term measures boosting growth for economy can be ignored. I mean, like, RBI did RBI did a major policy pivot, in last 2 months, and markets kind of ignored that. Already RBI, gave a growth stance, accommodative stance with a rate cut in the previous policy also. So I think that has been ignored. So that can be ignored. I think RBI has a lot more room to sort of accommodate Indian economy, boost Indian growth, which I am sure they will follow. But don't assume that that will be kind of cheered by the market in the short term. But having said that, whatever is happening globally, India is one market. See, our exposure to the US so US exports is very, very less. We're less than 1%, so less than 2% of the total GDP. And our tariffs are lowest as compared to, most of our competition, and whether it's China, Vietnam, or any other place. So, if US, let's say that part escalates, India tends to benefit net. India does not tend to lose. And it is also impossible that US starts manufacturing everything overnight or even if they start manufacturing, the cost of US labor and cost of Indian labor or anywhere else can't be compared. So, manufacturing, high-end manufacturing to some extent might move back, but that's not changing game overnight, for India at least. It might have negative implications for China. So in whatever chaos is going on, if you dispassionately, objectively observe, I think India stands very, very, net beneficiary of all this chaos. Of course, in shorter term, it also creates market volatility like anything else. But if you just cut the clutter, I think India is far, far better placed. And as we navigate through this volatility, India will come quite solid out.
Because the good morning, of course, and always good to talk to you. The question might be that, could it be that while Indian companies and the economy might be a net beneficiary because of, let's say, the higher trade war rhetoric, plus maybe some currency moves if they were to happen from China's side or otherwise on the devaluation side, that multiples could stay compressed? I mean, we might be trading at circa 18, 19 times. Maybe the earnings still stay stable, but the multiples go down, and therefore the markets correct a bit more. Could that happen?
It's already happening, Neeraj. I think if you see, it's already happened to some extent. In a shorter term, that's what happens, right? Uncertainty reduces the multiples. Uncertainty increases the risk premium, and thereby, sort of reducing the multiples. It's a very natural formula, which is what we have seen. And like I was saying, as let's say whether it is 6 months, 12 months, whatever the time frame is, as the uncertainty settles down and more and more people realize that India has done very well, India is standing very well in this whole thing, that same multiples might come back and will come back. And I want to, here one very, very important point I think people should not miss is our ability of our leadership to navigate through these kind of crises very well. I mean, we did very well in Ukraine war crisis, where we managed Indian inflation superbly well by, importing Ukraine, Russian oil. And same thing, I do believe that our leadership will have a fairly mature approach in terms of managing through this crisis. And we are not seeing any loose statement coming from India's side. We are having very mature sort of approach. And I do believe that India will have a bilateral trade agreement with the US very soon in terms of there'll be some give or take away, but it will be win-win outcome. And hence, I feel it will be a lot less disruptive as compared to any other place in the world as far as India is concerned or India and US trade is concerned. So net, I feel that as the volatility or chaos or confusion settles down, which could be 1 month, 2 months, 3 months, I don't know, or nobody knows for that matter, but it will surely settle down. And once that settles down, I'm sure India will come out very, very strong and solid.
Vikas, what is the strategy that people who are watching us right now should adopt? Focus on domestic consumer-facing companies, or where demand is not too impacted by global headwinds? What would you suggest? What are the sectors you're liking?
About it today, our banking sector is one of the best, in the world in terms of asset quality, capitalization. How does our banking sector's lives change because of ongoing US war or whatever, tariff war, right? That's very solid. And most of our, banking sector is lending domestically. It has no exposure, almost zilch exposure abroad, right? Now, if those same stocks you are getting 10, 15, 20% cheaper than what you were getting a few months ago, isn't it a great opportunity? So that's the point I'm saying. So, because of elsewhere, you are getting same company, same business, same, growth profile at a lower price. And these are the kind of opportunity which comes once in a while. So I would say stay focused on some of these companies which are very good domestic, entire banking pack we like. We think that pharma will continue to do well, whatever correction is happening in the pharma. I mean, US cannot afford to have aggressive tariff in pharma. Even if they have, I think it will have to be passed on, because the margins which pharma companies make are huge. I mean, we had recently US regulator came here, FDA regulator came here to woo Indian companies when they were facing medicine shortage post-COVID, because Indian companies stopped investing for US business. So there's no way, in my opinion, pharma companies will get impacted. CDMO, again, a great opportunity, does not get impacted. Many domestic consumption-based stories, how would they get impacted with the ongoing this thing? On the top of it, we're talking about interest rates coming down, inflation coming down, with the oil prices, being where it is, or commodity softening. So all those things, if you again, I'm saying, think with a peaceful mind. They are all, once the dust settles down, when the noise settles down, they are all positive, pointing towards one direction, which is positive.
Got it. Well, this is music to the ears, and viewers, while we thank Vikas Khemani today, I urge you all to hear the podcast that we did with him, wherein he's spoken at length about some of these things, and they hold true right now because it's not a very old one. But Vikas, take a moment to thank you for joining in today. We expected it to be a very dramatically different day than what it is right now, but great to have your opinion this morning.
Thank you. It's always good to chat with you.
Yeah.